Hey traders, welcome to Charts and Coffee. Happy Tuesday, everyone. Hope everyone's doing well. Hope you all had a fantastic, happy Christmas holiday weekend and got to spend some time away from the screens a bit. I know I did. It kind of felt a little strange coming back here to the office and booting the monitors on early this morning to see what's going on. But let's also remember that the end of the year is a tricky time. If there is to be a Santa rally, this is sort of the window now, the last handful of days into the end of 2022, into the first two trading days of 2023. And of course, we'll probably have some spotty liquidity, likely focused around where we have hot zones. So when you take a look at who's on bank holiday Monday, still have quite a few bank holidays on Tuesday affecting the UK session. And therefore, remember, we just have fewer eyes on the market. So when we see an HPI, which normally, gang, these 9 a.m. hot zones, normally we would not really be talking about them at all. So it's less about a choice and more a lack of options that we're just going to focus on the HPI or the S&P CS composite. They're just not usually market movers, but lacking anything else, why not, right? And that's kind of how this week is going to go. Pending home sales, Richmond manufacturing, unemployment claims, probably about that. And the Chicago Purchasing Managers Index is probably about as hot a hot zone as we're going to see this week as we wind down the year. So we have trading all 5 trading days this week. That's going to be your first 5 of 7 days of the Santa rally. Potentially, we're talking about the tendency, not a trade, but that's where we sit right now. So let's make sure we take a look at what kind of mood the indices are in. You take a look at the S&P, a little higher than where we ended on on Friday. Remember, when it comes to trends, it's really the Dow that continues to lead the charge, not the S&P or anything like that. So yeah, 4 days this week. Yeah, Bot just reminded me, Rog, it's not Monday, it's Tuesday. Yeah, so we have 4 trading days this week, and then we go into early next year. And that means that Friday would have been, I think that's what we've been talking about. Friday would have been day one of the Santa rally. See, um, the end of the year is tricky. Just keeping up with the calendars is tricky. All right, gang. So let's get into it. As always, this show is about your questions. And let's dive into the first one from Off Road Bear, who asks price setup example. All right, ADI. All right, let's take a look at that one. Okay, ADI. This the way of price drop on, then can put into watch list for monitor. Um, you're asking if we can put a price alert, I believe. Um, so let's look at how we can put a price alert. Sure. And if I'm missing the gist of your question there, Off-Road Bear, let me know. But first of all, what would the price alert be, right? If I want to create an alert for ADI, is it as it's crossing down through a certain price level, right? This is on TradingView, by the way. Maybe it's that volume ledge there around 163 and a half that I want to be alerted to. And then maybe I'm going to be buying, I'll remind myself to buy the calls. I'll put in the whatever the expiration date is, right? This is the way I'll put alerts in on TradingView, because I'll literally put what my instructions would be. So for example, and I don't know that this is something I would do, but let's say we would say buy ADI, maybe 20 Jan 163 call. And then I might put the trigger, 16350. That's what I'll do. And then I'll usually just copy and paste that line here in the messages. TradingView gives us a fantastic way to keep up with all of the different price levels that we might want to be alerted to across Forex and futures and stocks and ETFs. Crypto, heck, if you want to keep price alerts on that. And that's what I'll typically do. I'll usually put in something like that in terms of an alert. I can't say ADI is on my radar, but that's if I was going to put something on my radar, that's the way I would do it. All right. Okay, next up. Hope I had a great holiday. Prince, I did. Thank you for that. I think that getting away from the charts, coming back with a fresh set of eyes is always a good thing. I appreciate that. All right, next. And by the way, this week, since we do have the markets open Tuesday, Wednesday, Thursday, Friday, we will have charts and coffee all this week. We'll pass on the Sunday Raghee report, and then I'll see you all on Tuesday again for charts and coffee. All right. So in the meanwhile, my sector folks, we have a little bit of an updated schedule. I did send that alert out to you all. We will get together Tuesday, Wednesday. I keep thinking it's Monday. Unbelievable, Rog. Tuesday, Wednesday, Thursday, Friday, we'll get together for our first hour of the day, 9:20 to 10:35. I have a couple of other sessions this week. I'll be in the options room for the close on Wednesday, and I believe I'm going to be in the free trading room for a discussion of risk on Thursday. So check that out for those of you that are still watching the market and want to prepare for 2023. As always, appreciate all the questions. Okay, let's next up, Mr. Walker says, I'm ready to close out 2022. You know what? I doubt you're alone. I think a lot of folks want to just get this year in the books, but I can't hate on it too much. It reminded us 2022 why we need to be able to shift gears to short-term time frames, to day trading as needed. It reminded us that the strategies that we would like to use aren't always the ones that we're able to use, right? So we got a lot of lessons in 2022, which will prepare us for 2023 as we're winding down this hawkish, this tightening cycle from the US central bank. All right, next up, MCHP, sure. I would say, Mr. Walker, I'm more bullish than not on this particular. Let me get my drawing tools out here. So the question is MCHP. Oh, and Goldman Sachs, sure. The idea here is we were in an uptrend. You can see that there. Then we transitioned into more of a neutral trend, right? That would have me looking for oversold support level buys. Buys, why? Because the trend that preceded the chop was up. That's a pretty good pattern that I like to look at, which is keeping an eye on support patterns at the 200 propulsion. So that's what would be on my radar for that one, Mr. Walker. Goldman, ditto. Same setup. Same setup on that one. Yeah, ditto on that Goldman in terms of once uptrend, now neutral, looking for a long position. All right. Hey there, Frank. Good morning. Happy early New Year. I love New Year. I do. The futures room where I teach in the sectors, are they two different things? Yes. Okay. So the question is, hey there, Frank, as far as your question on the futures room. So futures room is where I primarily trade futures. I create some premium videos there twice a week as well. It's me as well as a number of other traders there that are also focused on trading futures. The masteries are different in that it's usually just one of us that are focusing on just our style, just our tools. So it's a focus on a particular trader's approach to the market, as opposed to sort of a chorus of traders together, walking the community through a particular asset class. So yes, they are two different things. Yes. And two different times. Well, they each have their own schedules, Frank. I have a schedule in the futures room and I have a schedule in my mastery. The mastery schedule is a little bit, obviously, a little bit, well, more me. Okay, that's what our mastery schedule looks like. And then the next question is, how do I get access to the V-score indicator? Frank, the easiest, most cost-effective way to do that is usually when we have different classes where the V-score would be of assistance. Trish, my right hand here in the office, will usually include the indicators in the packages for the classes. If not, We have a standalone package called the Volume Max Bundle, which has the V score, which is the main tool of that bundle. But then I also realized that I like a lot of other volume tools as well. And some of the things that I cannot find on, say, Thinkorswim, like an anchored volume profile for point of control, value area high, value area low, and an anchored volume weighted average price. We just threw in there so it would round out the package, and that is where you could find the V score. All right. So thank you for the questions. All right. Next up, Stephen, Freeport McMoran. Yeah. Okay. So um, I'm in Freeport 3750. So Stephen, when we get into something like Freeport McMoran, the question is, what did we pay for the option, right? The question is always, what kind of heat are we allowed to take? We talk about paper cuts and risk management as well. It's a key part of what we do in the Sector Secrets Mastery Room. So this is where I don't have you all ever waiting on for me to say, oh, I'm out of it now, right? You all know from the moment we get in, okay, this is my risk. Therefore, this is how many contracts I can trade. So when you hit that paper cut, Stephen, feel free to exit at that point. It's pretty much where it sits right now today. Um, well, actually, where it's set on Friday, it's pretty much at our break even. We took some heat on Thursday, no doubt about that. Um, and today we're going to find the continuation higher. Now, what's cool about trading with the style that I teach you all is quite a few traders said, Rag, it's a 30 some odd dollar stock. It's very affordable. Can we play the underlying stock instead of or in addition to the call? So we get usually I've noticed stocks that are under 50 bucks. A lot of our traders will actually trade the underlying shares in addition to the options. And again, the whole idea is knowing what we're risking of the account that we're trading, right? Not what Raghee's risk is or someone else's risk. Risk is not one size fits all. I think you all know that, but there's a pretty simple, easy to follow formula to risk and therefore position size. Those two are inextricable, right? They're absolutely inextricable. And that's where I'd say, when we're in something like Freeport McMoran, as long as that wave is holding and we're not risking more than the allowable percentage of our account, stick with it, right? That's sort of the no man's land muscle that we all need to develop, which is I haven't hit my target, but I haven't been stopped out yet. I can't let that anxiety or that nervousness or just that discomfort. I still get uncomfortable in a losing position. I hate it. But it's that no man's land risk tolerance muscle that we slowly build. So thank you for the question. Yeah, I still like that Freeport McMoran play overall. Yes. Okay, next up is Chris. I've got a small paper cut in TLT. Yeah, TLT just did not hold in the wave. It did not. Unlike Freeport McMoran that did, TLT simply did not. It would be a little below the wave, be better. Oh, you know what? Right now, Chris, this is where the paper cut, we're going to let it go. I don't have another setup. So the question is there another setup? Not for me yet. When I see you all in the mastery here in about 5-6 minutes, we can take a look at really ZB is what we would set up for our next TLT trade. But I don't have another ZB trade brewing quite yet. The next one is going to be an oversold support level. I'm still bullish, but the next one's going to be an oversold support level. All right, next up. Hey there, Rachel. Are the tools taught in sector applicable to all markets, including crypto? Yes, Rachel, I focus on time, applicable in all markets. I focus on price, of course, applicable in all markets. Volatility, ditto. The last one is volume. So there's 4 factors of the market: price, time, volatility, volume. The last one is not applicable in Forex, but it is applicable in crypto. But it can be tricky with crypto, that last factor. However, the first 3 are very powerful. So the simple answer is yes. Just be careful when you're trading an off-exchange market like crypto or Forex that you don't rely on volume too much. But since we teach a really holistic 4-factor approach, yeah, absolutely. Intraday and end of day too. Yeah, intraday and end of day too. Absolutely. CVX. Gosh, energy was having such a great uh, October, even late summer. And then, yeah, Oscar, what happened, right? CVX, I like the long side. I don't want to be a short seller in XLE or Exxon or CVX. No way, no how. However, I'm going to prioritize those markets that are still in trends as opposed to the ones that are not, the ones that are in chop. I don't want to be short CVX, but I really don't have a clean buy setup in that regard. Again, it's definitely a buy. It would be an oversold buy. Think slow stochastic. Think Darvis support. That's one of the things I teach you all. Find a Darvis level. Find an oversold stochastic in a neutral market. Bingo! It's a really reliable setup. However, we have to keep directional bias, and we have to have that combination of tools that are telling us we have a price-based support and a price-based confirmation of oversold. Minor lows are great too, but Oscar, a lot of things we could apply here, but I don't have an open position. I can't say that it's a priority either. I would love to find something a little bit better structured or in an uptrend, but I like the idea of looking at energy again to the long side. You bet. What are my thoughts on Apple? Hey there, Matt. Sure, let's jump into Apple. My thoughts on Apple is I'm only now even allowed to start thinking about being potentially bearish. Now you'll see here we have some headlines on Apple. We've just now, and this is the first time since end of October, we've just now gotten back into a very, very fresh downtrend, but I don't see a collapse yet. It's a vulnerable trend transition, meaning it's not probably one that is widespread yet in that we're going to see that crushing sell off below say 130. I'd be very careful here. We are below the 200, but I think there's probably just as much a chance of an oversold bounce, a la something like what we saw in November, now as there is we embrace the downtrend and make lower lows. Um, and this week is going to be interesting because we know Santa Rally. Do I think Apple is going to benefit from window dressing? No. Do I think Apple is going to get hurt by window undressing? Take the ugly things out of the portfolio. I don't think, no, I don't think it's a tax loss harvesting candidate or a window undressing candidate either. So let's be careful here. And then I guess my question, Matt, is there anything else in the XLK? Is there anything else in tech? And this is how I scan. You're looking at it right now, cracking open those sectors. This is the secret of sector secrets. Cracking open those sectors and saying, would I rather be long AVGO? Would I rather be long NVIDIA? Um, MasterCard? Is there anything above the 200, at or above the 200? Cisco, Visa, MasterCard, AVGO. Um, Even NVIDIA is kind of meh, but that's what I would prioritize. So Apple brings us into this world, and then we ask ourselves, is there anything else better, more better structured? I'm not a bear yet. I have a hard time being overwhelmingly bearish in Apple quite yet. All right. Thanks for the question, Matt. And then let's see. Next up, Prince asks, when in the Sector Secrets Mastery Room will I trade futures and options at the same time? When? Every morning, Prince, every single morning. Just wondering how many things I will pay attention to at the same time. So yeah, let me address that here real quick. If we're looking at the S&P, right? It's a great question. If we're looking at the S&P, I'll do this on toss. What are the different? So I'm going to look at S&P. That's going to be my touchstone. That's going to be the focus. But once I find a setup, maybe it's short the rip this morning. Where else can I short the rip based on what I'm seeing from this nearly 24-hour liquid futures contract, which is going to give me a much more complete look at the psychology and the opinion about this symbol, about the S&P, than say SPY, right? But if I'm willing to short S&P futures, can't I go into SPY? Of course. Can I go into the micro MES futures? Absolutely. But remember, I'm still watching ES. Could I go into SPX? Again, absolutely. But I'm going to look at the ES to make that decision on all of it. Meaning, I don't have to look at all four of those, I can just keep an eye on the ES futures, and then that would be mapping to all the other S&P trades, all the other symbols that I would have to. So I don't have to pay attention to a lot, right? I just have to pay attention to the touchstone. This, by the way, ES and NQ, this could map to even the sectors, XLK. The sectors can map then to individual stocks. So when you're able to understand, again, that sector secret of how do I watch a handful of things and understand what's most probable in a much larger group of things, that's what we do. So I don't have to look at a lot. I really don't. I only have one pair of eyes, and I'll be honest, these pair, probably not the best I could have been issued. But, we deal with it, and we're able to do that because we understand the connective thread. All right, gang. And just like that, wrapping up charts and coffee. Thank you as always, my caffeinate and dominate crew. I'll see you tomorrow. Same time, same station. Be good to each other, gang.